Good morning and welcome to the Caravel Minerals Investor Webinar and Conference Call. All attendees are in a listen-only mode. If you would like to ask a question, please enter it into the Q&A panel within Zoom. I will now hand over to Managing Director Steve Abbott, who is joined by Executive Director Alastair Cook. Over to you, Steve.
Good morning all, thank you for joining and thanks to NWA for hosting this. I'm just going to give you an update in terms of where Caravel is sitting with its project going forward. Probably just to point out to start with is the covering photo here just gives you an indication of where we are operating in the wheat field of Western Australia. As you can see, it's very open territory and very accessible, which makes it one of the key advantages of this project. All right. Won't go through the disclaimer. Just a quick corporate snapshot. As of yesterday, share prices are sitting around 35 cents, which gives us a market cap of $136 million. We currently have just under $10 million in the bank. You can see on the right-hand side there, the layout of the ownership, approximately just under 10% owned by the management, 7.9% by Paradise, which is our largest single shareholder, and the rest of the balance, 23.4% for the top 20 are sitting there. Look, Caravel and the copper mineral project is sitting in the southwest Yilgarn terrain. Now this terrain has now become sort of a province hosting some of Australia's most important new discoveries in the last 20 years. It includes Australia's largest gold mine, Boddington, which was discovered in the 1980s, our project, which was discovered by Dominion Mining in the mid-2000s, a recent discovery of Chalice and Julimar's deposit in 2020, and Greenbush's lithium project, which is the largest lithium project in the world. So the Southwest, surprisingly enough, has now hosted some major deposits of a world-class capability. Just recently, a couple of weeks ago, we put out a revised scoping study. The revised scoping study was an update from where we were from the 2019 scoping study. There was a few changes that were made from the 2019 study, effectively based on some work that was done by Ausenco, who are our key engineering company undertaking our pre-feasibility studies. And they did a number of initial trade-off studies looking at the work that was done previously and also how the project may be able to optimise going forward. So out of that, we have a 28-year mine life producing roughly 35,000 tonnes of copper in the first 5 years, and then after we go through an upgrade, producing about 55,000 tonnes of copper from year 6 onwards. So this is a large operation which will be running for a long period of time. Now, just to point out that this is based on the previous resource that was put out in 2019, and since then, last week, we put out a new resource, which we'll talk about a little bit more. The whole key to this project is its scale and simplicity. That's what makes it such a viable and encouraging project going forward. On the mining side, it's a conventional open pit, very low strip ratio of around 1.1 over the life of the mine. In the first 5 years, that's likely to be more or less than 0.5 to 1. We currently have 100 million tonnes in the measured resource. So the risk in terms of the technical side on the resource is getting lower and lower as we do more and more drilling. And that's enough to certainly pay off the first few years of the project. The first few years, we have access to 59 million tonnes of higher grade ore, which we think will be streaming, which will be a higher grade than the rest of the mine at a very low strip ratio. The metallurgy we're seeing as well is very good, very high recoveries, very quick recoveries through the flotation circuit. So this again is a very standard type of processing plant. It's just a standard crush, grind, and then a float, and then a filter, and then we export it to the market, which will be out through one of the local ports, either through Geraldton or Bunbury. So we will be processing approximately 12 million tonnes a year for the first 5 years, and then we will upgrade that and basically double the capacity of the plant to 24 million tonnes from year 6 onwards. Another major advantage of this project is the low cost from the grid power. So we will tap into the local grid power, which also enables us to access renewable energy. So we get a very competitive rate from the grid by accessing that power. We are close to ports, Bunbury and Geraldton, as I mentioned. Both of them are just over 300 k's away. We're situated on major local government roads, so we don't have to build a road infrastructural network. Very easy access to get our product to the port and onto a ship and into the market. Also talking a bit later about the concentrate grade, but we're getting excellent concentrate quality with very low impurities within the concentrate, which should be highly sought after in the market. And so far, we're seeing no benign waste or tailings. In other words, we don't expect to have any acid mining drainage issues. You can see in the table on the bottom right there, gives a quick summary of the financials and other aspects of the project. So it's a very long project, 28 years, produces a pre-tax NPV of just under $1.5 billion. It's a very high recovery, and it's in a very low risk jurisdiction, which all makes this a very viable project going forward. This is an indication of where we're sitting over the last few years. The copper price currently sitting sort of just over $4. I think, like most people, we're pretty bullish on the copper price going forward. We think that's probably only going to go higher in the short term. Most analysts are reporting a deficit of copper as we move forward. And with the electrification around the world, I think that's going to remain for quite some time. Most grades around the world and copper deposits are reducing their grades. Also, we're finding less and less major discoveries of copper throughout the world, which is only going to add to the copper price going forward. Just quickly looking at the financials for the project going forward. So the capital costs were updated from the 2019 scoping study. Although we have optimized the circuits, the previous circuit was looking at a HPGR circuit, which was higher in capital costs. The SAG circuit we are now proposing is typically lower in capital costs, but also what we've seen, as most people are aware, over the last couple of years, there has been quite an escalation in capital and operating costs throughout the world, mainly through increases in raw materials such as steel, and also increases in labour costs as we move forward. So our capital costs at the moment are sitting around the $576 million. You can see the breakdown on the right there. Largely that's tied up in the processing plant and then the infrastructure. Just a little bit more around the operating costs, which is another key aspect of this project. The total processing cost is currently sitting around $14.42 per tonne of ore. You can see the breakup in the middle there. It's roughly evenly split between the processing, mining and other costs. On the processing side, on the right-hand side, power is one of the largest components of that cost. And you can see the others broken up through the agents, consumer and labour, etc. On the mining side, and this is based on contractor mining, we're expecting around about $2.93 per tonne at a 1-to-1 strip ratio. Again, you can see a large component of those costs for the mining contractors tied up in the capital and the maintenance. So the actual capital cost is tied up within the contractor mining costs within these graphs here. Compared to a lot of other operations, this is a key advantage to us. So on the mining side, because of we have such a low strip ratio, half our costs are about half of another operation that will be running a 3-to-1 strip ratio. So most mines do not have such a low strip ratio that we have, that we did. It's more typical to have 3-to-1 or up to 5-to-1 or even higher in a lot of operations. So the costs are considerably lower than other operations around the world. On the processing side, again, because of our low electricity costs, we are very competitive in our reagents, in our operating costs on the processing side as well. So if we were off grid and producing from diesel, which most mine sites are, then our electricity costs will be almost 3 times the price of what they are now. So a considerable advantage to us going forward. There are further opportunities to reduce. So one of the main things we're looking at going forward is looking at what we're calling ACE, automation, communication and electrification, particularly in the mine fleet. So you can see in the bottom left there is considerable advantages to moving to electrification and automation within the mining fleet, and we're doing considerable work to prove that up and to make that a viable option going forward. So admittedly, we're also looking at owner mining, so some of the capital costs that will be tied up in typical contractor costs will go under the capital side of things, but there are a lot of advantages in moving to electrification and automation, which we think is going to be a viable option going forward. On the processing side, we continue to look at how we can optimize between our recoveries and our throughputs, and what other options we can to increase our throughput throughout the plant and reduce our operating costs going forward. So there are still plenty of opportunities to move this forward and reduce our costs. We just recently, last week, produced our updated resource model. This now puts us at a the largest undeveloped copper project in Australia. So our resource has increased quite considerably since our previous resource update was done back in 2019. It's now puts us in a very good position for a very long life mine going forward. This gives you a quick update in just terms of how the resource has grown over the years, quite considerably from 2016 through to where we are now in 2021. So there's been a 53% increase in contained copper at a cut-off grade of 0.1% going forward. So we now have 2.84 million tonnes of contained copper within the project. The project also contains small elements of moly, copper and silver, which you're also looking to potentially produce as well as a byproduct. So in the last 12 months, a considerable amount of drilling has been done on the project. Most of that drilling has largely been done on what we call the Bindi pit, which is the pit to the north. So we have been drilling this out because this will be the first of the pits that will be mined once we get up into operation. So we have not only extended the pits at depth, but also along strike as well. So it's probably a little bit hard to point out in here, but we put quite a number of deep diamond holes into the resource. And we've also been extending the resource and looking for higher grade zones within that resource to produce in the early years of the operation going forward. I'm not sure, Al, whether you want to add anything else to the resource at this point in time.
No, that's fine, Steve. We can deal with anything else in questions.
Yep. So look, we're currently sitting at a very large resource, and we've got plenty of resource there probably for the next 30 or 40 years, but there is plenty of other opportunities within the region going forward as well. So this resource is sitting in a belt of around about 30 kilometres strike of mineralisation. We have quite a number of other targets within the region that we will also be looking at in the future, but there's no great rush in terms of making a resource too much larger than where it is, given that it's the life of the mine currently where we're sitting at the moment. The focus is more upon improving the knowledge of the current ore body and also the opportunity to look for higher grades within the current resource. Look, other activities, so most people are aware we're probably 3/4 of the way now through our PFS development. So a lot of different activities taking place in all areas of the PFS. So on the mining operations studies, we're heavily involved at the moment in doing the pit optimizations, the mine scheduling for the pit going forward. That work will be done and completed probably in late December, early January. As we mentioned before, we're heavily involved in looking at investigating electrification and automation for the mine fleet going forward, which will put us at the forefront of green copper producing projects within the world going forward. Metallurgy, we've done quite comprehensive metallurgical test work that continues, looking at the mineralogy, the comminution, flotation, material characteristics, copper concentrate specifications, etc. All these things will continue into the DFS, but so far they're indicating a very reliable, very consistent ore body, which has very high recoveries going forward. Ausenco have been the major engineering firm currently working on the project. Ausenco are well renowned for undertaking engineering on copper projects throughout the world, very good reputation. They're progressing through their design of the plant layouts, throughputs, and the engineering associated with the infrastructure required for the project. So Ausenco should complete most of their engineering work by mid-December, and that will then feed into our financial modelling going forward. So I mentioned before, we are looking at 12 million tonnes for the first 5 years, and that'll be increased to 24 million tonnes from year 6 onwards. We do, however, continue to look at the process flow sheet to look at how we can optimise that and how we may be able to increase throughput or increase recovery or lower the cost going forward. So there's a number of other options that we're looking at in terms of coarse particle flotations, inputting a secondary crusher circuit, or to increase that MPV and payback for the project. As mentioned before, the work we've done to date has shown that we're going to produce a very clean copper concentrate. So a lot of the copper concentrates around the world have a lot of impurities in them, which usually causes them to attract penalties at the smelters. So far to date, the feedback we've been receiving is that we can produce a very clean copper concentrate, very low in arsenic, which is one of the major issues throughout the world. In fact, we're probably 10 times lower than the threshold for arsenic at most copper smelters. So we believe that this copper concentrate will be in high demand, and from a marketability point of view, it should be highly sought after going forward. Infrastructure, one of the major advantages of where we're sitting, only 150 kilometres from Perth, accessible by major roads. We don't need to build airstrips. We don't need to build power stations. It's one of the major advantages of this project. As we said, we have two ports options, Geraldton or Bunbury. We think at this stage, Bunbury is probably the preferred port just because they have greater capacity and it's actually an easier route to access. But either one of them are probably a viable option going forward, which actually gives us some flexibilities. Water, we are actively sourcing water. There's not a lot of water right at the mine site, so we're currently drilling about 50 kilometres to the west. We believe that the data we've seen to date, that we should be able to achieve our water requirements from this area to the west of the plant. Power, again, as mentioned before, we're going to connect into the Southwest Interconnected System, which enables us to not only access power at a very competitive price, but also we can tap into the renewables, which are increasing in that circuit going forward. And we're currently working with Western Power. We have an access application in place at Western Power, and we are working with them quite heavily to meet our power requirements going forward. Environmentally, another key aspect for this project. We have a team of people working on the environmental approval side of the project. We've been busy undertaking base level studies, particularly during the spring season. Most of those studies will be complete in early December. And then we'll look to refer the project to the Environmental Protection Agency around about the end of the first quarter, early second quarter next year. So the part 4 approvals is probably on the critical path at this stage for the project, but we have a very strong team of people working on that to bring that into to get approvals for that project in a reasonable amount of time. We are also working on our land tenure at the moment, so we have put applications in for our mining leases and general purpose leases, and we're continuing negotiations with landowners in the region to secure the land tenure within the project area. So the pathway to production, as said, so we're looking to complete the PFS in the first quarter of next year. From there, we hope we will move pretty quickly into the DFS. In fact, a lot of the work being done in the PFS is actually to a DFS standard, so we will flow straight into that. We expect the DFS is going to take approximately 18 months. It's probably going to be dictated by the approvals process. The technical aspects is likely to be quicker, but we expect within 18 months that we'll have the DFS complete. We'll then move into a final investment decision and then into construction. At this stage, we expect construction should take about 18 months. So within about approximately 4 years from now, we should be in production on this project going forward. Yep. So look, that sort of wraps it up pretty much where we're sitting at the moment. We are well advanced in terms of where we are sitting with our resource, where we're sitting with our PFS, and then moving into our DFS activities. We've just recently announced the new mineral resource, which is a 53% increase from where we were previously. We're well advanced in terms of all of our engineering studies going forward and all our approvals going forward. And look, we should be in a good position to complete the PFS early next year and then get into the DFS work. So hopefully that gives you a very quick update of where the Caravel project is sitting and where we're heading in the future. But we're very encouraged and very excited by this project. We think it's in a great location, a great ore body, and in a great commodity for where the future is heading at the moment. So thank you. Back to you guys. And if you've got any questions, we're happy to take them on board.
Thanks, Steve. If you'd like to ask a question, please enter it into the Q&A panel within Zoom. There's been a couple come through. So your first one is in relation to the updated mineral resource estimate. So it says, how much more exploration upside do you see for the project? And secondly, how much more drilling is planned for 2022?
Do you want to answer that, Al?
Yeah, I can answer that. Do you want to skip back to that section on the slides? That's probably on the cross sections. That's probably the best one to talk to on that. So there's a lot of upside still in the resource. As we've understood the geological model over the last couple of years, that's been the key to making the breakthrough that we have made in adding additional tonnes, both at depth and adding a higher grade at the surface. So you can see on those 3 sections that are cut through the Bindi East Limb, the initial discovery was how the ore body folds over in the north and stacks on top of itself, like that top right-hand side slide shows. So now that we have a better understanding of how that works, we're applying that to all of the other prospects as well. And we're confident we can continue targeting these high-grade zones where these hinges or fold noses are developed. The big increase in tonnes then came from understanding that limb that we call the East Limb extends down at depth, and the bottom 2 slides show how as it's gone down, it starts to fold around again and heads out to the east. So these are getting quite deep down there. It's around 600 metres, 670 metres in that deep hole on the lower left slide. And we haven't allocated a lot of effort to pursuing it at that depth, given that we've got a lot of tonnes in the schedule for the next 30 years before we get down to those type of depths. But we will continue working on looking at the extension of that limb out to the east, and there is a possibility it comes up shallower. And so I think we'll add a lot more tonnes as we explore that area to the east of the Bindi East Limb. And we're seeing a similar geometry at Dasher, where at depth it's folding around. So as our geological model improves, as we spend more on exploration, I think we'll continue to add tonnes. And this is the type of project that will easily replace its tonnages over as it is mined. So I think the mine life is going to be a lot longer than what we're currently forecasting. If you go to the second slide, Steve, the next one after this, it just shows where Bindi is on that right-hand slide. You can see Bindi, north of Bindi is Ninan, south of Bindi is Dasher, and right down to the south is Opie. So that's stretched out over a 30-kilometre strike length. And so there's mineralisation all the way along that margin. You can see the general shape of that granite, which is the host to the porphyries, and the mineralisation occurs all around the margin. So we've really only been focused on Bindi and more recently at Dasher. And so there's a lot of work to do on those other projects where I'm sure we're going to continue to find more tonnes and potentially some high grade sweet spots in them that might come into the mine schedule earlier.
Great, thank you. Your next question, there's a couple of questions here regarding the PFS. So firstly, is the PFS on track for delivery on schedule in the March quarter? And secondly, what changes are you anticipating for the PFS from the scoping study?
Short answer is yes, it's on track for the March quarter next year. We're probably some of the major changes we're looking at, well, maybe not necessarily major, but certainly in terms of the resource and the mining schedule, we're expecting that we will have some higher grade ore or streaming in the first few years of the project. So that is certainly one key element we're looking at. So try to bring some of the high grade ore that we're finding, particularly from that Bindi East region, into the early years of the project, which will increase the payback and the NPV of the project. We continue to look at the viabilities of moly within the circuit. So the work we did from the previous scoping study indicated that the moly circuit was almost sort of NPV neutral in terms of the payback on it. We are expecting now, though, after looking at the new resource out, that we're going to have more than likely some high grade moly in the early years of the project. In which case, once we run those numbers when we get the schedule, it's a good possibility that the moly may be viable to put a moly circuit in and recover the moly as a separate product within the concentrator going forward as well. And as also mentioned, we continue to look at the opportunities to whether we can increase the throughput for this plant going forward by looking at some technologies such as coarse particle flotation or adding an extra secondary crusher and so forth into the project. So there's a number of elements that we're looking at that may come into the completion of the PFS, or they may actually push out into the DFS. That's depending on the timing and where we sit at that particular time.
Thank you. We've got a few more specific questions here now. So there's just been some discussions on some boards about farmers' objections to water waste from mine and public objections regarding ESG. Is there any impact of water instruction from the deeper final pit?
Look, we're not expecting to get much water from the actual mine area itself. So there'll be very small amounts of water that will come in from dewatering the pit. So there's not going to be a huge impact in terms of the area from there. The water we're looking at from further west, part of the area we're actually looking at, or most of the area we're looking at, has actually got rising water levels within that region. So the fact that we'll end up hopefully taking water from that region will actually be net positive for the region. And some of the areas where we're likely to get water will actually be within the Perth Basin, which will be licensed. So again, we'll need to basically be able to prove that we won't have any detrimental effect on the area. The other thing is to point to note is that the water we need for the project does not need to be fresh water. So we don't plan to be in competition with the local agricultural industry to compete for fresh water. We're quite capable of taking sort of brackish or more saline water. So we don't plan on taking the water that the farmers may want from that area.
It's worth making the point, there's no groundwater in the area we're operating. The rocks are very competent, and so there isn't, unlike the East Coast where groundwater is very important to the farming operations, nobody uses groundwater in the area we are. There's a few shallow bores for gardens, but we're not having any impact on them.
Thank you. Next one is a question regarding tenure. So going forward with exploration licenses and the need to, do you need to surrender or convert those to mining licenses? And if so, how's that progressing?
Yes, we will. So it'll be a combination of mining license, general purpose leases, and miscellaneous licenses. So we recently submitted applications for those licenses over the main project area. So they're currently sitting within the process at the moment for the application.
Sure. And next question's regarding funding. So what is the company looking at for funding? Offtake or farm in, or if you could just give an update on funding options for the project.
I can give a
potential funding options. I should add. Sorry.
We're looking at a scenario that's very well established in the WA mining industry, where for a larger project like this, the opportunity is to do a deal with an offtake group that's interested in taking the product for the life of the project or for some significant period of time. And the examples that have been well established in WA are in the iron ore industry, where the offtake partner buying the product becomes a key part of the project. In many cases in those projects, the Japanese partners took a minority interest in the project, something in the range of sort of 15%, and that investment in the project allowed the other party to raise enough money to fund their equity contribution to the debt. And then, as has been done recently with projects like Roy Hill, but going all the way back into the 70s with the very first projects that BHP ran, the parties that came in for the offtake also provided a significant amount of the debt, if not all of the debt, for the project development. So we're looking at a very similar thing, also with Japanese partners potentially, but not excluding any others. Koreans and others are also definitely in the mix. And the idea would be that one of those partners who comes in to take a long-term contract to buy the product would buy a minority interest in the project. That investment would allow us to fund our equity contribution, and they would assist in the debt facility. And the kind of terms being offered by the Japanese development banks like JBIC, who are typically the partner they use for that debt funding, have been very attractive in the recent deals that they've done. So there's a well-established group. There's a well-established group of partners who've got a very good track record of investing in Western Australian projects, and we're pursuing a similar kind of debt structure to what has been done with them in the past.
Thank you. And another question here is just, how does your project compare with copper projects internationally? I guess that's in terms of, you know, location, grade, ore body and financial metrics.
Look, it's location. I don't think it gets any better than where we are. You know, we recently were speaking to someone that just put a drill hole in Canada and sorry, in Nevada, and you know, they spent $500,000 on one drill hole because it's just trying to get access to it. So I mean, we've got in a great location, very easy to get access, very flat, cleared land, close to ports, close to roads, close to infrastructure. So it doesn't get much better than that in terms of location. I'll just show you a quick slide here. In terms of grade and size, I mean, this is gives you an indication. These are all projects mostly around the Americas, but all similar sort of type grade projects. So although not that common in Australia, there's a lot of projects around the world, and these are all in operations that are operating quite profitably at a very similar sort of grade level. Our copper project is large, although there are larger ones around, but certainly, you know, we've got mine life here for 30 to 50 years here, so it's quite large compared to most copper projects around the world. There are some larger ones, but we're certainly up there in the mix of some of them. So look, financially, at the end of the day, then it comes down to costs to operate. Our capital costs are very low, capital intensity, because of our location. We don't have to spend huge amounts on infrastructure. If you were up in the Pilbara building a plant like this, then you'd probably be up for another $200 million in capital costs just for infrastructure. And the other thing then is our costs, our operating costs. So because of our strip ratio and because of our metallurgy on a dollar per tonne processed, our operation is also extremely competitive compared to a lot of the projects around the world.
Right, thank you. There are no further questions at this time, so I'll now hand back to Steve for closing remarks.
Look, thank you again. Thanks for hosting this today. And there you are. Really appreciate your time. Thank you for everyone for joining us. Hopefully there is some interest there in this project. We're certainly very excited about it, and we think that there's a very, very strong project economics going forward, and very high probability that we're going to get this in production in the near future, and we'll be in a great position to capitalize on the increasing copper price. So this is a great project and a great location, and we thank you for your support. So thank you.